Keep calm and trade on. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of June 26, 2016. And I really think that's the best advice I can offer. Keep calm and trade on. I think it's good advice. I call my weekly newsletter Beyond the Noise, and that's for a reason. That if we follow the news and information that's breaking about financial markets, that it really is noise. The the job of the writers and reporters and financial press is to get you to read their article and to generate interest and to be a little bit um, exciting. and and we'll look at the list of headlines here in just a minute. But trying to place trades, trying to manage your money, your account based on that news, it can be really devastating. And as if you've been following me for a while, you know that I teach we follow the reality of the charts. And the charts have a really clear picture. Now what happened last Friday was dramatic, but it wasn't catastrophic by any means. And even though it was dramatic, it was fairly orderly. And we'll look at the charts in just a minute and show that. So here's a quick look at the headlines, just using Google News and type in market. Here we got Barron's. The Brexit sell-off highlights the strength of the U.S. market. So that sounds like good news. If we go down more, housing questions, beware of the dead cat bounce. And then New York Times, turbulence and uncertainty. Um, LA Times, stock market plunges, but Brexit unlikely to spark a U.S. recession. So how would we trade based on that? What would we do? So news is interesting, it's entertaining, and it can draw our attention to markets, but it certainly is nothing to base trades or investments on. And we certainly don't want to do simplistic, kind of uninformed things like buy on the dip. That's not a strategy for me. So let's go ahead and retreat to reality. Let's go ahead and look at the charts and see what they're telling us here. Now, the market did go down dramatically on Friday. The Dow Industrials closed down 610 points. It's 3.39%. The S&P 500 went down 75.91, which is 3.59%. I'm looking at the S&P 500 chart. So that is a dramatic move. But also, the circuit breakers, the so-called circuit breakers that would come in and stop trading if the market dropped too much, they never kicked in. We never hit the circuit breakers. And what they call level 3, the first level, is triggered at a 7-point decline, and we were only halfway to that. So it really wasn't that bad. And the market was fairly orderly. It was dramatic, but it was orderly. And so that's why I say, hey, let's stay calm and trade on. Let's keep trading here. Now, in looking at the chart, I've been talking for a couple weeks about these purple lines. So I got a lower purple line here, and I got an upper purple line here. And those two lines are defining a channel that the market has been trading sideways in. Some people call it a channel, call it bracketed, sideways, all the same thing. Started in early March, and the market's been it's like a ping pong ball, like a pong game, right? Badoop, badoop, badoop. So we really need to see the market break out of this channel, lower or higher, to say something about a trend. Now that could happen early next week. We could break out below this, and if so, there's going to be a really good case that we're then going on to head down. If you remember last summer, we broke out we'd been in a channel last summer, pretty much almost the same channel, from February through August. And when we broke out, it broke out with a vengeance, and there was some great profit to be made. That could happen again, or it could be a little slower. So we really got to wait and see if we break out of this channel down or up, and base our trading on that realities. I think it would make sense to wait. So I did say trade on, stay calm and trade on. So we're not abandoning the market, but I think also part of staying calm is let's get a few more price bars, a few more days under our belt, and see what we can learn. And if we do break through this kind of key support level, which is at 2025 on the S&P 500. So no reason to bail out, no reason to do anything irrational, like you said, like buy on the dip or something like that. Let's look at the overall chart pattern. And right now, the overall chart pattern, let's just switch to a weekly chart. We've done this pretty much every week. Right? We're at the end of a very long bull market that began back in 2009. And so we've had 5 or 6 years. And at some point, this is going to correct. It is going to correct down here to Fibonacci levels, which currently are at about 1644 to 1343. Now, has that started yet? We don't know. We don't have proof. But if it breaks out of this channel, that could be the proof that it's beginning. And if it does break through that and start a series of lower lows, lower highs, which Dow theory tells us is the definition of a trend, we could be heading down to take out these lows from early this year, last summer, and head down toward this eventual correction. But we don't have evidence that that is starting yet. We could get it this week. We could if it continues with some drama and breaks through this level, or it could continue inside this channel, which is kind of terrible to trade. It's no fun. So we got to wait and see. I don't think I'm going to be jumping into any new trades. The first few days of this week, I'm going to wait and see. I'm going to stay calm. I'm going to stay with my existing positions. We're in gold and energy, and we got some stuff that's doing really well. We're short banks, and they're doing really well. So we'll stick with our existing positions, and we're going to stay calm. We're going to trade on, and we're going to let the reality of the markets tell us. All the news and information, collectively matters, but what really matters is how the market responds to all that news and information, and we don't have to guess what the market's going to do. It'll just do it, and we can follow along. It will tell us what it's going to do. So let's look real quick at gold and oil as we wrap this up. So here's gold, and we've been updating gold every week for several months now. And gold had a multi-year decline, and then it found this bottom. And back in February, we said when it went across 1113, we thought the recovery in gold was starting, and it has been going up pretty dramatically. Now, we had talked about an Elliott wave count on this, and from the bottom down here, Elliott wave 2, up until this top right here, and then we had it. So that's all 1, 2, 3, and then we've got a wave 4, and we talked about that, and that there would be a wave 5, and wave 5 is really starting now. And on this particular time frame, that wave 5 price range is, using Fibonacci extensions, up into here. So this is the target zone for wave 5 on gold, 1353 to 1448. And we just got into that, with this big move on gold on Friday as the markets went down pretty dramatically. And so it really looks like gold could continue going up into this target zone. I would be a little leery about taking new positions because we're here and there's not much room, but existing positions still have some room, and I would probably have a stop right underneath here at now. So that looks like the right thing. So gold probably still going to continue up. Any new positions I would be really careful. We're getting pretty close to the target zone for this particular trend. But again, more highs looking good on gold for now. Oil looking a little bit different than gold. So oil's in a recovery as well. This is a corrective wave to a massive move down that happened over the last several years from over $120 a barrel down to $30 a barrel. And we had said back again in February that as oil made this high here, it came as it went through 37.09, that the recovery was starting in oil, and of course it's gone up pretty dramatically since then. We now have a lower low. Right now we have a low and a lower high. If we go below this line right here at 46.32, we could have a bit of a little wave 4 like we saw in gold before the next leg moves up. That could be what's happening here on oil. So we got to watch this key level. If it continues up from here, then this move up will just continue. But if it takes out this low, we could have lower low, lower high, lower low, and settle into a bit of a little wave 4 before going up. The eventual targets for gold oil for this recovery are $63 to $83 a barrel, in that range. And that hasn't changed. So at some point we will get, this is all an impulsive wave. At some point we will get a correction to it before the trend continues. Could it be now? Maybe. I would wait and see. So let's just hold off on oil a little bit and see what it does. Well, that's the update for this week. I'll say it one more time. Stay calm, trade on. Don't walk away from the market. Just be careful, and don't let the news influence our trading. Let's let the news draw our attention to different market sectors, be aware that there is volatility, but then come and make our decisions based on solid technical analysis and the reality of the charts. Have a great week, and I look forward to the update, and we'll see if we got a trend and a direction next week. Thanks, and take care. Bye.